We are getting excited for potentially IPOs to reopen, particularly as we see a new administration. Everyone's talking about more pro-business. Is that going to happen?
I think so. I mean, everybody's very excited about 2025, especially going into 2026. If more interest rates fall, you'll see a lot of people pump more money in the markets, and you might have a wonderful season of IPOs. We're still waiting it out right now. It hasn't happened. Service Titan has filed. We're hoping, and fingers crossed, that does really well. And I think that will open up the doors for more people to want to come out to the market.
There's been some bitter pills to swallow on the progress. For example, Klarna in the heady days of 2021, the valuation is much different, but it has improved from recent years. What does that speak to in terms of where the valuations will lie when we come to the public market?
They'll still be down from the last couple of years. You have to remember that we had zero interest rates, so people had an outrageous amount of money in the markets. With the pandemic and the stimulus, people just pumped money in the IPOs as if everything was great. And I think what you'll see in the next couple of years is only the best companies will sort of come out at the beginning, and those best companies will get valuations that are reflective of their being unique and being exceptional.
Are those best companies always going to have to be generative AI adjacent? Or
no,
indeed?
No, I hope not, right? I think there are a lot of great companies that are waiting. I've been involved with Canva for almost 11 years, and they do use some AI as part of their product offering. But Canva started out as a tool for everybody to use to be more productive. And nobody sees them as an AI company quite yet. And everybody's talking about their possibility of IPOing in the next couple of years. So you'll see a lot of great companies come out.
Will they all come out in the United States if indeed they are? Perhaps we're seeing Indian listings, for example, pick up for local companies, or is it all about coming to the US?
I think if you're a founder, no matter where in the world you are, a lot of them tell me it's their dream to IPO in the US. So you'll see the best ones IPO here. That's where all the capital is and where people are excited about having their listings.
People are exuberant, though, also about M&A picking up. I mean, many would say there's still limitations on the Magnificent Seven to really make too many acquisitions. But is that going to be a more furtive area of exit, at least?
I hope so, but I'm skeptical of it. We have a couple issues with M&A. The first being that a lot of it was blocked. You saw this morning that we had another one that was kind of blocked, this Kroger-Albertsons one. We might have a new administration. We might have a new FTC that will be more lenient towards allowing some of these M&As through. But right now, the M&A market is, for the most part, shut down, especially for folks in tech companies.
So where are you seeing, for example, a lot of the activity when you're trying to get into deals? Is it that you're writing still the initial checks? How much have you been tempted by some of these secondary market activities that seem to be the area of giving certainly investors and employees liquidity?
There's a lot of activity happening there, but my taste has always been either first check in or on the Series A and not doing these secondaries. That's where you spot these founders with amazing talent, and they'll probably go to IPO if they achieve what they want. Google went to IPO. I was there as a very early employee, and I watched that reopen the public markets in 2004. And you have one great or two great or three great companies IPO, and the market will start booming again. We saw it firsthand with Google when things were shut down after Enron and after the first recession and the dot-com bust. So history doesn't quite repeat itself, but boy, does it rhyme a lot.
It does rhyme. Does the never-ending wall of money going towards generative AI startups continue?
We're already seeing it stop a little bit, right? There were a lot of, it ebbs and flows. And with a lot of generative AI startups that were doing video models or doing, the first stage, a lot of them can't raise money anymore. They're calling companies like Canva and saying, "Please acquire us. We're just out of cash." So I think you're going to see that first wave start seeing their bubble pop, and then you'll see a second wave of applications, the ones that are changing how legal is done, changing how insurance is done, changing how insurance underwriting sort of occurs, start to become very popular, and I think those will have some value. We saw this in mobile firsthand. A lot of the companies that were doing mobile infrastructure all went kaput, very, very quickly, or they got bought as acquisitive M&A by Google or Apple. And what you'll see is companies like that are the incumbents in Gen AI, whether it's Google or Microsoft or OpenAI, which is entirely almost funded by Microsoft, sort of keep the lion's share because they have access to all the compute power.
But SoftBank's got a lot of money going into OpenAI, has to be said.
But what you'll see is a lot of the application layers, just like how Uber and Airbnb became the application companies for mobile, the application companies for Gen AI will start becoming very popular and have a lot of value.
And this kaput moment, look, there are a lot of zombies out there who are still clinging to unicorn valuations, but no one's quite ready to rip up the script and mark it down. When did those kaput moments actually happen?
When they run out of cash. We saw this first end of the dot-com bust, right? A lot of companies had these crazy unicorn valuations because the market was unlimited, and all of a sudden, in one fell swoop, after there was that big recession, the dot-com bust happened, and all these companies, almost in like a couple-month period, went kaput overnight. And I think we'll see this with some of the Gen AI companies. The market will just say, we don't have money for you for funding. They won't have a profitable business model, just like how although the e-commerce companies never made a dime, they lost money on every transaction. You'll see that business model's risks sort of play out, and then all of a sudden, with no more cash being able to be raised and the money being burnt, they'll have to close their doors.
Where in the generative AI stack are you talking about the application layer here rather than the foundational models?
I think it's between the foundational models. Those folks have lots of funding. They have incumbents, unlimited compute power. You have the applications that are taking advantage of some of the new features and the new launches that are happening in the foundational models. But there are a lot of companies in between that were using some of these models to do better videos or better writing tools. That's where you're going to see a lot of wreckage.